up about 1% in the end. What did you make of it?
The Australian session was a good one. We gained 1.1%, but volumes were still quite light, and it looks like a lot of the market has decided to go on holidays. It is school holidays at the moment, and we are seeing holiday-like volumes. Yesterday, $3.3 billion worth of stock traded. Today, $3.4 billion worth of stock being traded. But the gains on the Aussie market really being driven by those higher commodity prices that we saw overnight. Oil prices jumped by 4.7% on the back of those tensions with Iran, and we've seen the energy sector benefiting as a consequence, up by 2.5%. The materials sector also up by 2.5%. In fact, if we have a look at those areas which actually lost ground today, it was those defensive areas of healthcare as well as the utility space. If we have a look at the market, I guess a lot of big events towards the end of the week. We see the European Central Bank meeting where 25 basis points worth of cuts are expected by the market. The Bank of England meeting where a £50 billion to a £75 billion quantitative easing is expected to be announced to the already total of £325 billion. And then the non-farm payroll numbers on Friday, where 90,000 jobs are expected to have been created in the US. So some huge global events, and I guess ahead of that, not too much volume going through the market. It doesn't help that it's school holidays at the moment too.
For equities, obviously a higher strengthening Aussie dollar has pros and cons. Where do you think potentially people could look to take advantage of a strong Aussie dollar when looking at stocks?
Well, obviously, it's good for going on holidays overseas, so some of those travel companies would be benefiting. We have seen international travel, I guess, one of the areas which have been an underperformer for some of the airlines like Virgin and Qantas. So when the Aussie dollar does get high, we do see an uptick in terms of international travel, and it has been quite a difficult area, but also some of those travel websites as well. But we know that a high Aussie dollar is a key headwind for the Australian market, and that's because so many Australian companies derive most of their revenue from offshore. So really that's a key headwind which would keep back the Australian share market. At the moment, though, we are seeing a high correlation between the performance of the Australian share market and the performance of the Aussie dollar. We've seen the Australian share market reach a 7-week high today. And altogether, part of it is that we are seeing the Australian economy ticking along well. We saw better than expected first quarter GDP numbers. We've seen very low unemployment rates here in Australia. Retail sales numbers came out today, and we did see a good number there, up by 0.5%, and we also saw the April numbers revised upwards. It was initially a reading of negative 0.2. That's been revised to a positive 0.1%. So altogether, Australia looks like it's in much better shape, especially compared to Europe as well as the US. We saw the IMF coming out to downgrade their expectations of US growth overnight, and although it was a slight downgrade from 2.1% in April down to 2% now that they're predicting for 2012, it does highlight some of the downside risks to the US economy, both domestic risks and international risks. And I guess the domestic risks, we're still looking at that debt ceiling, which will probably be hit in about September, October, so possibly before those November elections in the US. And then, of course, that the Bush-era tax cuts expiring at the end of the year. At the same time, Operation Twist comes to an end. So I guess the US is very much going to be focused in the fourth quarter of 2012.
Around Europe throughout the program. Juliet, wanted to get back to those retail sales figures you mentioned coming in better than expected. Look, did we see much of a reaction on some of the retail stocks? They've certainly been in the headlights of lately. Of course, David Jones, the most notable one. Did we see much of a reaction today?
Initially, James, we didn't see much of a reaction at all in terms of the retail stocks, but by the end of the session, that had a pretty good performance. So maybe a late reaction. We saw David Jones up by 2.2% and Myer also up by 2.4%, with Harvey Norman up by 0.3%. So it does look like a late uplift there. And of course, these are the main numbers that we were talking about. These were being watched to see whether perhaps the RBA interest rate cut, that 50 basis point cut that we saw in May, had filtered down to consumers, and whether they were spending at the stores. We've also seen that carbon tax relief package, which hit household budgets sort of the middle of the month as well. So altogether, a positive result, and the retailers did seem to benefit by the end of the session.
And look, almost at a